Tuna Amobi, Senior Equity Strategist, CFRA Research. Tuna, thank you so much for being with us. I mean, it's an exciting day. People are finally back to the casinos. The hotels are open. What are your expectations for this group overall? I mean, I know it was down 99% because nobody was there.
Right. Good afternoon, Nicole, and thanks for having me. I think the news about reopening definitely provides some silver lining in terms of, in terms of actually getting things back to normal, which we expect is going to take a very, very long time for Las Vegas. Remember, this is a market that draws close to, well over 40 million visitors every year. The convention business has been effectively ground to a halt. And as you alluded to, the latest data coming out shows that, occupancy, pricing, and any number of metrics, attendance is virtually, down. And keep in mind, before this COVID-19 setting, I think Las Vegas was actually on the up and up, and we saw some of the key metrics pretty strong. So to the extent that we're getting news about a gradual reopening now, albeit likely limited capacity, this is something that investors want to see to show at least that there is some light at the end of the tunnel.
Right. I was going through some of the names here and looking at the group, which there was some optimism about this group now. They were not really doing as much right now. It's day one, right? These public companies that are running these Vegas casinos, they really basically, as you know, Tuna, they cut the guidance, suspended the dividends. They took other actions in order to make it through the pandemic of roughly 80 days, give or take. So which ones of the group, if any, do you think can recoup some of their clout?
Well, it's funny because we actually had a sell or strong sell recommendation going into, coming into this month, and the pandemic obviously wreaked a major havoc in the sector, and this is also starting from Macau and China, where ironically most of these companies derive the bulk of their free cash flow in Macau, which is now in the earliest stages of recovery. That being said, we upgraded, just a few weeks ago coming out of the Q1 earnings from sell or strong sell to neutral on the expectation that, we could see potentially a bottom in Q2. Obviously, talk of reopening provides some more visibility to that. To be sure, we still think that the journey towards recovery is going to be very, very, difficult. So a lot of these casinos, as you pointed out, the story from last earnings has been really to preserve liquidity, dividend suspension across the board, share buybacks as well. So I think many of these names are still a long way off from, recovering to where they were. Shares are still down, most of them anywhere from 26 to over 30% year to date, which is still better than declines of 50%, for some of the names even just a few weeks ago. So point being, it's going to be a very long recovery journey. Right now, if you're an investor, we're just staying neutral until we can get more signs of semblance of normalcy, not just in Las Vegas, but also in Macau, which just last month, gaming revenues dropped another 99%, for the month of May. So really showing that it's really going to be a very difficult journey.
Yeah, no doubt. And, I don't know if you saw some of this news because it is somewhat new, but you can digest it pretty quickly because it's never good news when the Department of Justice investigates your company. And that's exactly what's happening. The Department of Justice investigating the Las Vegas Sands for the Singapore casino for money laundering checks. I mean, what's going on with that? I mean, that's not good news. I mean, the stock, and I'll tell you, the stock was down over 4%. Now you see it down about 1/3 of 1%. It certainly recovered from that, but that's not great news.
Indeed. And that's why you see the price action today, despite the news of the reopening, which, one might have thought would be kind of a positive news. So it's never a good thing when you're under investigation by a foreign government. That just adds another layer of overhang to a group that's already facing some major issues. With that being said, I just think that at the end of the day could be just a headline risk. We think that the major issue now for the group is to navigate this COVID-19 disruption, ensure that they can, abide through this major liquidity pressures. I mean, think about, roughly anywhere from 250 to 300 million in monthly cash outflow for these names in Las Vegas, even while these casinos have been closed. So when they talk about reopening, I just want to make clear we're not talking about anything close to what we had before. It's still going to be very tight to break even because there's still a relatively high expense burn rate when you're operating well below your normalized capacity levels.
Sure. Yeah, I love Vegas. I love Vegas so much, Tuna. I wish I were walking through Vegas right now. It's absolutely beautiful. My last thought to you is that basically MGM, too, another point, is that they have the PPE, the masks that the employees have to wear, but they are strongly suggesting, encouraging guests to wear masks in public areas. So we might hear some clamoring that some people are pro-mask, some people aren't. You're going to get some commentary, I'm sure, because I know you're following this one. Some people don't want to wear masks and some people do, and MGM is not making it mandatory. All right, Tuna, we're going to circle back with you in the future because right now I know you're not hot on these. You have sell ratings, strong sells. So we'll see. Let's see if they can get their way back. Tuna Amobi, Director, Senior Equity Strategist, CFRA Research. Thanks, Tuna.